Mic test, mic test. Final mic check. Okay, I want to test the sound here. Starting at 9, okay? Give me a while. I just test the mic, then we can. Wow, phone suddenly got issue. Today punctual, okay. Today starting on time. 9 o'clock, 9 o'clock. Wow, I thought I'll be late because of the phone issue. Okay, mic check, mic check. Okay, mic test, mic test. Final mic check. Wow, a bit of delay. Let me see. Okay, last mic check and we are starting. Okay, can. I think we are good to go. 9 o'clock. I think good to go. Last check. Okay, can. Thanks for the patience. So, try to make sure the sound is okay. Cause my mic earlier has some issue. Okay, so thanks for joining. So starting very soon, maybe after this. So same thing, 3 segments. So I stream Monday to Thursday, 9 p.m. Time zone is GMT plus 8. So 1 hour stream, we keep it short. It's not too long. If not, everyone will be very bored and tired. So the whole idea is that we will have 3 segments always. First segment, we talk about the stock market in general, market sentiment, the stocks, the new position, stock itself. Second component is the options, but we talk about what are the opportunities, my move, and what are the new option position I build or close. And also talk about option strategy. And after that, when market open in about 30 minutes time, 30 minutes market open, we also go in and see any potential opportunities as well. Lastly, it's a chit chat session. So today we want to talk a little bit about the retirement plan. Like, I've retired for about a year. Okay, I left my job, so-called jobless, since last year. So I want to share with you all my retirement strategy so far when it comes to spending money. So have a chit chat, not just a casual one, the last part, because the first 2 parts maybe a bit heavy. So the last part probably tone down a bit, then we just have a chit chat session. Last part probably lasts of 5 to 10 minutes. Okay. By the way, if you are here, feel free to say hi or hello, okay? And if you are here previous streams as well, just join and say hello. I hope all of you all had a great evening and work has been good. And it's Wednesday already. Thursday, Friday, Saturday, Sunday. Okay, so maybe just hang on about 1 more day. Then Friday, Saturday, Sunday is kind of like a weekend mode. Everyone will be probably more relaxed, happier. Don't have to squeeze on the public transport every time, unless you have to on the weekend. Then you can probably sleep longer and enjoy the weekend. Okay, I drink some water, then we begin. Okay. So I want to give you an update first, okay? The past few days I've been saying I want to buy Apple share. And then my target is about 280, 290. If we cannot reach there, 305 or a little bit 305, I will also buy. But yesterday, It went to about 304, 303 that kind. I miss it. Why? Because yesterday night after I streamed, I was very tired, you know. For some reason after streaming, I was so tired. I go lie on my bed behind here, okay? Straight away I slept. And then by the time I woke up, the market closed already. So I missed the opportunity to buy my Apple share. But it's okay, I just checked the market, okay? Pre-market is still about 304, 305. So when market opens, if the price is about 304, 305, or hopefully lesser, I will surely buy the Apple, about 10 to 20 shares. We see how it goes later. So just an update on the Apple position that, yeah, I overslept. But yesterday was really tired for some whatever reason. After the stream, I was like, wow, cannot take it, I want to sleep. So that's it. So that's my update on the Apple position. Next, okay, so I also want to talk about China stocks. Okay, so today I want to really share a bit about the China stocks and my sentiments on the China stock. I know I probably said it before, but I just want to recap a bit and share with you all why, okay, China stock very hard to go up in price, especially now, okay? It's just all the factors together, not just micro, be it the CCP side, they anyhow find a China company, find Alibaba, find Tencent, ask them to do national duty by contributing money, common prosperity, right? Take out money, give to me, so I can spread to people. So not just from this micro perspective, but macro wise, I think, be it from the US counterpart, US concern, you know, geopolitical risk, all this plays into part. But let's just dive a little bit deeper on why my take, I have such a strong conviction that it is quite difficult for Alibaba or China stock to go back to its all-time high, and I learned how to accept it. So to be honest, my current plan for my China stock is that I'm ready to take some losses. I acknowledge it, the 50k loss I had to take some, but I'm not very keen to take the whole entire $50,000 loss. I hope I can minimize it to about $25,000 loss. Hopefully, okay, hopefully. So I share with you why China stock cannot go is because stocks, the price appreciation, like capital appreciation, the stock price is determined by the people who are trading on the market through buy, sell, interest, all this. It's not by the fundamentals. Fundamentals of the company can be very good. Like example, you know, we all know China's stocks actually, a lot of companies have strong fundamentals like Tencent, all these things. But fundamentals alone don't determine the price. That's why a lot of companies out there, in fact, there are hundreds of companies in the US or China market that remains languish. Their stock price always depressed and remain undervalued. And that is the truth, hardcore truth. It just cannot go up. Why? Because as long as people don't buy the shares, stock price cannot go up. You look at Tesla as a good example. Super overvalued, way above the price to earning ratio, you know, almost 100 plus. But people still buy. And that's why the stock price continues to go up. Even though the fundamentals is clearly quite weak, you know, they are not making enough profit to command such a high premium, to be honest. But people like it. It's popular. People want to buy. So that's all it matters. So if a stock that has no interest, no volume, people don't want to buy, the stock can never go up in price. That's the cold hard truth, unfortunately, you know. So as soon as people don't want to buy, you know, don't want to pay for it, it will remain depressed. So that's one of the issues with China stock. Now, second, I just want to give a bit more depth is that the capital market, okay, the economy, world economy, especially the US market or global economy, about 50% or even 60% is determined and held by the US side. Okay, so the US, okay, their economy is so strong that about 50 to 60% of the market value all dominated by them. So you think logically, let's say, okay, one day, US, not say sovereign fund, be the US, BlackRock, all the huge institution, all the fund manager, be it BlackRock or Vanguard or Straits, all these, Straits Index, all this, they decide to buy a China stock. For some reason, let's say one day they decide to buy. Okay, okay, China stock undervalued, they decide to buy. Do you think the US government won't do something to them? Clearly, right, it's likely that, hey, you are from US, you are in my country, you have been earning our money, then you use the money to go and buy some China stock to boost their economy. The US government or even Trump can just say, hey, I don't like it, I'm going to tax you. 50%. You want to invest in Alibaba? Can. I tax you 50%. Now, do you think BlackRock would dare to invest now? Of course no, right? 50% tax, Suddenly Trump just said, I give you 50% tax because you put money in China stock. So as a result, institutions, all these huge investors, all the big fund manager, they don't dare to buy China stock because of all this potential repercussion. And whether we like it or not, they hold almost 50% of the global money value in terms of the company shares, all these things. So if all these big funds, institution, big fund manager, BlackRock, all these iShares or whatever, they don't want to buy China stock, it's another huge issue. That's why China stock cannot go up. Okay, they are one of a big catalyst, to be honest. The reason why US stock prices can go up so high is because they buy into it. Not just those retirement fund or index tracker or those authorized participant, or they call it market makers or whatever. Okay, all these people plus all these funds, if they don't want to buy the China stock, they don't want to invest in China market, unfortunately, China stock just cannot go up. Because whether we like it or not, they really hold a huge percentage of the economy in their hands. It's not like Singapore. Singapore, global share is what, 5%, 10%? They are like, to be honest, insignificant. Whether they buy China stock or don't buy, right, it won't create too much of a difference. But the US buyers, the institution funds, they really do make a difference. So if they don't buy the China stock just cannot go up. So if you have countering views about China stocks, let me know. Because I think through very carefully and thought through a lot, that I acknowledge, okay, maybe there will be a day Alibaba, Tencent go back to its all-time high. But the question is when? When? Do I want to wait for 20 years? 20 years of lost opportunity. I could take the money, accept the loss, put into an ETF. I think to be honest, within 20 years, not only can I recoup my losses, I can even earn more than that. So that's my take. Okay, that's my take. So that's why when you want to invest in stocks, especially in China stocks, you really have to look at the whole entire view, not just the micro from the Chinese CCP side, but also from the US side as well. And not just from Trump perspective, but also from the institution, those fund manager, those big funds, BlackRock, iShares, or Vanguard. Okay, they really play a very huge role when it comes to influencing the stock prices, because they hold so much money, be it in their ETF or whatever funds that they receive from people. So if they don't do the investing, they don't buy, it's just very difficult for the share price to go up. So in short, my plan currently is I accept the loss, but I don't want to accept the 50k loss. So I'm now hoping very hard, pray, okay, that my China stock can hopefully go up a bit more. Like Alibaba, it's like stuck in the 120 range. It's like go up a bit, go down a bit. So Alibaba all-time high was about 250 or 280. The last recovery, I think last year, the highest was 180. So if Alibaba can recover back to 150, 160, I will quickly liquidate about 25 to 50% of the position very quickly. Yeah, I won't hesitate. I'm no longer aiming for it to go back to 200 or 250. I think it is really an impossible goal. So I just want to share with you all my take of my China stocks. Okay, very upfront, I tell you, Alibaba, Tencent, MG, and FXI. Okay, these four I have it. Okay, I think and FXI is the small cap or large cap, I can't remember, but they are basically ETF that has a basket of tech and non-tech stocks. So that's my plan for China stocks. So if you have any suggestion, any comments about China stock or what I should do in my China stock, please let me know. Okay, having said that, honestly, if China stock still cannot recover in the next couple of weeks or months, right, I would just quickly accept a 25% loss now. Okay, so I think someone gave me a good suggestion, okay, to maybe just sell 25% now and accept the loss straight away. So I mean, it's still quite a big loss, okay, in terms of valuation now. Okay, the percentage is still there, but at least now I quickly cut 25%. I still got 75% left. 75% China stocks holding I keep, then 25% I cut the loss. Okay, I accept it. Maybe the loss is like what, divide by 4, $12,500. I accept it and then quickly put into a maybe ETF or whatever, or IWDA, or even SPY 500, and then hopefully it's the beginning. So hopefully there is a rise in the ETF, and hopefully with the valuation I gain from the US market could cover the China loss. So it's like doing it in batches, like 25% first, then maybe another 25%, another 25%. So I see how, okay, my plan is hopefully, Alibaba can recover to 150160. I take a 50% loss. I'm no sorry, I sell 50% of my stocks holding and just take the loss, whatever the loss amount is, I take it first. If no improvement, Alibaba continue to stay downwards, okay, I just cut 25% straight away regardless of the price, and then I see how the remaining for 75%. Okay, so that's all my plan and thoughts for China stocks. And if you have any other thoughts or comments, let me know, or any good suggestion on how I can reduce my loss. Reduce my loss on China stock. I'm glad to hear. Okay, or maybe you all think China stock has incoming catalyst. Let me know, so I can hopefully there's potential to recoup my losses. Hopefully, like I said, I'm not too hopeful, to be honest. After I share with you all my thoughts processes, yeah. Okay. Hey, let me see any comments. Hey, you, nice to see you again. You, hello. Hey, yeah, good to see you again. Yeah, good to see you again. How was your day, y'all? And Vroon, PL Ren Vroon. Hey, Vroon. Nice to see you. Thanks for dropping by and saying hello as well. I hope you all have a nice day as well. I think work just ended for you all. Okay. So yeah, I mean at the start I said weekend coming soon. So hang on tight. Okay. I mean if you have retired, okay, good for you. You can every day is an off day for you. But if you are still working, Friday, Saturday, Sunday coming soon. Okay. Tomorrow is Thursday. Just one more day literally. Then Friday, Saturday, Sunday, you all can hopefully relax a bit more. And I hope stock market has been good to you. You all have been making money, all this. So thanks for saying hi. Appreciate. Hey, any questions, comments, feel free to drop. Okay, especially on my China stock. You all maybe can share with me how you all mitigate. Or if you all have invested in China stock, can share your story with me also. I would like to hear them. Okay, we just see any other things, then we move on to the next part, okay? Okay, so next part, okay, later when the stock market open, I quickly look at Apple stock, okay, because I always wanted to buy. Okay, like I said at the start, I missed it earlier. So later we will see the Apple, what's the price. Hopefully it stays at below 305. If it's 300, even better. Okay, because I'm keen to buy like 10 to 20 shares of it. Okay, so second component, let's go to second component, which is the options component. Okay, so this time round, the option part today is a bit heavier, just a bit heavier. But I try to summarize it, okay? I'm not here to debate on the theory or whatever. I just share with you what works for me. Then you can decide whether, whether it influence your option strategy or what. Okay, so the first thing I want to talk about for this option strategy, in case you don't know, I trade the option view strategy. I sell cash cover put, and I sell covered calls. Let me just switch screen. Okay, because the thing stuck already. Okay, I put my face on top. Okay, because the session has started. So my last screen below the lowest, you can see all my options position. So I sell a lot of options. I don't buy options, never. Okay, because due to time decay, I want time to be on my side, probability to be on my side. So that's why I only sell option. And when I get assigned, I will do the covered call. So it's the option view strategy basically. Okay, so today I want to talk about why I only view stocks that are in an index or in the ETF. So example, okay, my top 3 favorite stock, in fact, Apple, Microsoft, Alphabet, all these 3 stocks are in a lot of ETF, be it your SPY 500, NASDAQ, all these things. I think even Russell also. So if the stock I'm going to view or sell options on is not in an ETF or an index, I will not do it. Okay, all the stocks I sell options on must be in an index. Okay, can be any index depending on, as long as it's a popular index like SPY 500. So I share with you my rationale, okay. So there's first theory number one, okay. So when people buy ETF, okay, you know a lot of people love to buy ETF, okay. When they buy ETF, indirectly they're actually causing the underlying constitution, that means the stock that it tracks, to rise in price as well. So let's just make it a simple example. Example SPY 500, it tracks the top 500 company, right? So when someone buys an ETF, okay, indirectly the 500 stocks that is in this ETF will also go up in prices indirectly. Okay, I use the word indirectly because it makes sense, right? You know, it's like a basket of stock. So it's like SPY 500 is a basket, right? You buy the basket, more and more people buy the basket. Eventually, the stocks inside will also go up in value. So that's theory number one. So it is true, okay? But of course, the counter theory is that, you know, when you buy ETF, in the ETF world, let me just share with you briefly, okay? It's a bit complex, but let me just keep it very simple. I know some of you already understand, but let me just briefly explain, okay? So in the ETF world, it's not just buy ETF directly from the issuer like BlackRock. No, we don't do that. Actually, how it works is, in the ETF world, there's two markets, the primary market and the secondary market. Retailer like us, we are in the secondary market. So we will buy from the stock exchange, from our stockbroker, all this. The primary market is actually filled with people like all the institution, big banks or whatever. Example, JP Morgan. So all these JP Morgan or big institution, right? They are called authorized participant or something like that. There's a term for it, okay? So let us not confuse ourselves. Let's just give an example. The primary market has a lot of banks. Example, JP Morgan, okay? All the big banks, all the big institution, finance people. So let's just say JP Morgan is in the primary market. I'm in the secondary market. Okay, that's how it works for ETF. So every time I want to buy ETF, or you know there's a demand for ETF, right? JP Morgan in the primary market will buy the basket of shares, okay, 500 companies for the SPY 500. Then they take the 500 shares, they go to the BlackRock, okay, whoever is doing the ETF, example Vanguard or whatever. They go to BlackRock, right? They give the 500 shares to them. Then BlackRock will give them the ETF. That's how it works, okay? Give them the ETF called SPY 500. Then once they get the ETF 500, SPY 500, right? The ETF, then JP Morgan will sell it to the secondary market, which is to us, retailer. Me, I'm in the secondary market. Okay, so that's how ETF work. So I know earlier I said that, you know, when there's buying pressure from the ETF, the basket, all the stocks inside will also go up in value. That is true. Okay, but because there's this primary market, okay, I told you JP Morgan there, right? They are the first line. What they do is they will arbitrage during this type of opportunity. So example, I'll give you an example. Example, ETF now is valued at $110. $100. Let's just say ETF value at $100. SPY 500 is valued at $100. But you look at all the shares, the 500 companies, right? The combined value is only $90. So you see there's a difference, right? There's like, hey, how come the basket, all the stocks, 500 company, all that is only $90, but this ETF is valued at $100, but the constituent is the same. Okay, if you combine that, it's the same thing. It's still the 500 companies. So that's the arbitrage opportunity for the people in the primary market. So JP Morgan will take the advantage, or they will sell the ETF for $100. No, sell the ETF, okay, collect $100. Then use the $100 to go and buy $90 worth of the SPY 500. Then they make the difference and it's $10 profit. Okay, so just a brief explanation. I don't want to go too much in that. This is legal, by the way. Arbitrage is actually legal in this sense for all these people in the primary market. That's how ETF works actually. So the fact that it is true that buying all these, when too much buying, a lot of people buy ETF, right? The underlying assets, okay, the 500 companies in the SPY 500 will also go in value. So having said that, right, because when you're trading options, okay, let's go to options now. You sell options that is also in the SPY 500 or in any index, it is more likely, right, that your stock will likely go up in value as well, because there's interest, is a good company. That's why it's in SPY 500. You don't want to buy you don't want to sell options or covered cost or cash cover put on companies that are not in index. Okay, why? Because if it's the index, right, likely there's more interest, more volume, all these things. And like I said, the price also likely be influenced and could potentially go up because of people buying ETF. ETF are popular. People buy ETF indirectly influence the stocks to go up in value. So that's why when you sell cash cover put or covered calls on stocks that are in ETF, more likely you can do better. That's just my own personal opinion, okay, my own strategy, not financial advice, not financial advice. That's why I only sell options, okay, cash cover puts options on stocks that are in the ETF. Example, Alphabet, Microsoft. Okay, so now I just bring you back to this primary market, okay. So some people will argue like, hey, the rise in prices of the individual stock not really significant. Yeah, it's true, because like I said, there's an arbitrage opportunity. So if the ETF get bought up too aggressively and the constituent inside, right, the 500 companies starts to become lower in value, they will take the advantage to go in to make the difference. So usually another thought, okay, another theory, which is also true, is that, you know, when people buy ETF, okay, a lot of people buy ETF, the constituent, the 500 companies that is inside SPY 500, individual companies, will not be affected too much. So it is also true. Okay, so I just want to share with you the whole complete view that's why buying or selling options on companies in the ETF, popular ETF like SPY 500 has value itself. Now, second component, remember all this buying and selling from all these institution funds, the JP Morgan, okay, all the people in the primary market, because every time people buy ETF, like I said, demand for ETF, right, they need to buy individual companies to go and exchange for an ETF. You know, like trading like that, like merchant like that. Like people playing games, play MMORPG, they sell and farm, right? Need to from here go to here, bartering like that. So every time they do all this buy and sell, what does it do? You know, it's both direction. When people demand for ETF, they buy so they can exchange. Similarly, sell is the same direction. Okay, they sell, then they can transfer and then sell it out, so they can take the shares back and exchange back. So it's the same process, both direction. So it's all this buying and selling. The most important point is it generates a lot of volume. Okay, buy sell, a lot of volume, right? Let's be honest. So all your individual companies are a lot of volume. That's why you can see all the popular companies in SPY 500. The volume is insane, millions one, every day, what, billions here and there. Whereas those not popular company, especially those not in the ETF or SPY 500 kind, you can see the volume very low, and that is one issue. When there is no volume, right, there's likely no interest. To be honest, right? I mean, you see the volume so low, you're probably not interested to buy or sell. But when there's high volume, likely more interest to buy and sell, to trade, right? Because there's more chance to make money on the ask and sell price. Basically, the bid and ask price, buy and sell price. Because if there's no volume, the buy and sell price can vary a lot. Huge. Okay, let's be honest. You know, some of the stocks like in Singapore or even in the US or even China, okay, the volume is so little, the bid and ask spread can be like 50 cents difference, ridiculous. So those stocks usually not much interest. And remember, low volume means no interest. No interest means not popular, okay? Remember we talked about the stock earlier in China stock. If a stock is not popular, nobody will go buy and sell. As a result, the stock price can remain suppressed. So imagine if you're selling options on it, the stock price is suppressed. How can you ever continue the view strategy or get out of it? So even your company, okay, let's say you sell whatever, you view whatever stocks, let's say some random company, like Apple, let's just use an example, Apple. Apple is no longer popular, stock price remains suppressed, and PE ratio maybe go to 1:5, okay? It will remain undervalued, whether we like it or not, because no volume, no interest, and it's not popular. So that's why popularity is quite important for a stock, especially doing options on it. So that's why there is benefit when you sell cash cover put or do covered calls on those stocks that are in the ETF, example SPY 500. And it is likely if a stock is in SPY 500, likely if it's there, right, likely it should have some decent trading volume at least. Okay, at least, okay. Okay, so lastly, the third point I want to say is that Remember, all this volume also determine the bid ask spread, okay, buy and sell prices, okay. Same thing, if a stock has buy and sell price, the options component also will have buy and sell price. Okay, it's the same thing. It's not like buy and sell is only for buying stocks. Then options no buy and sell, fixed price, no such thing. They also have a bid and ask price. So if you don't trade a stock or you don't sell options on stocks that has good bid and ask price or huge volume, then the bid and ask becomes so wide. So imagine the bid is like $1, then the ask is 150. Wow, so much difference, 50 cents, times 100 is like what? 50 cents, let me see, 50 cents times 100, $500. Correct? No, $50, sorry. 50 cents, $50. So there's a $50 difference, between the buy and sell price. And the issue will come, I tell you, the issue will come when you're trying to close your position. So imagine your position is now profitable. But because the bid and ask is so wide, right? Let's say you queue in the middle of the price, okay? Maybe bid $100, ask is 100 and let's say $150, okay? 150 versus $1. Okay, you know that you queue at $1, you won't get it. So you maybe offer $1.25 to close the contract. You may never ever get to close because of the low volume. So as a result, you may end up have to pay $150 just to close the contract. You have to pay more to close. Instead of paying $1 or $1.25, you have to pay $150 to close the contract. And it could be from a profitable trade become a loss-making one because of lack of volume. Okay, so I hope I give you all the reason. I know the first part a bit intense about the ETF, the whole concept, okay? But don't have to confuse yourself. In short, right, it's about volume, popularity, and interest. And that's why I only trade and sell options on stocks that are in the ETF, popular ETF like SPY 500, because it assures me at least certain amount of volume, interest, popularity, and of course longevity. Like I said, if it's popular, people will keep buying, sell, then there's volume, and it also has a better chance of going up in price, especially the capital appreciation part. Remember, a company can have godlike strong fundamentals, okay? But if it's not popular, nobody cares, it will remain suppressed. It's unfortunate, okay? That's why I can tell you, if you do your research in US market, right, there are thousands, probably thousands of, maybe across the world, in fact, there's thousands and thousands of undervalued company because not popular. So people don't want to beat up the price. So that's why the price remains suppressed. Okay, so that's all for my options part I want to share with you, okay? I hope it's not too heavy, but if you have any questions, want me to explain more, feel free to let me know. Or if you all don't agree with my train of thoughts, also can highlight, okay? I'm happy to learn from you as well. So that's why, conclusion, I only sell stocks that are at least in the ETF or index, especially SPY 500. Honestly, if I want to view a stock, right, that is not in SPY 500, I will not do it. I will not do it. Okay, so just giving you all my honest opinion. And honestly, when a stock is in an ETF, a popular one like NASDAQ 100 or whatever, or Russell, right, it matters. It really does matters to the stock price especially. Okay, be it interest or being forced to buy. Okay, SpaceX is a very good example. Recently, right, Elon Musk launched SpaceX, right, IPO, that kind. One of the reasons why SpaceX at the start had such a huge rocket upwards so fast is because actually a lot of index, okay, like NASDAQ, I think Russell or something like that, okay, they actually ban some rules, okay, not say ban some rules, they change some rules. Maybe they are good friends with Elon Musk or whatever. They actually have strict criteria before including any stocks into their index. But for some reason, I don't know why, they decide to change their rule. Just nice the time is coincide with SpaceX IPO. So as a result, a lot of funds that tracks like NASDAQ 100 or Russell, right, they are forced to buy SpaceX. They have to buy because they track the index. So a lot of fund manager, big fund, right, rush to buy SpaceX especially when pre-open or whatever, they have to include them in because they have to follow the index. It's a rule. Okay, if you track a particular index, all the component, you have to track as closely as possible. So it's like that one. You can't deviate, unfortunately. So as a result, technically a lot of people who hold these funds that tracks the Nasdaq, they are so-called forced to buy SpaceX also. So because of all these huge funds buying up all the SpaceX actually rocketed up, especially at the start of the IPO. So remember, being in an index, being tracked by an index and ETF does matter, okay, especially in terms of the value and longevity and the popularity. So the exception is SPY 500, okay. SPY 500 stood their ground, okay. They say, no, we are not going to include SpaceX because there are certain criteria, like must be on the market for 12 months, that kind, certain floating shares, all this. We won't go into detail, but in short, SPY 500 held their ground. They didn't want to include SpaceX. But in short, you can see the effect of a stock being in a good ETF or any popular ETF. It can affect the price. Okay, so just really want to share with you today the concept of option selling and why I always sell options only if that stock is in an ETF. Okay, so this is what I really want to share with you. If you have any questions, let me know, be it on the ETF or how the ETF created the redemption, can also let me know. Yeah, if you're an expert in ETF, also can share me whether I'm wrong or not, okay? Because all this is based on my own knowledge, I know, through the years of investing and then research and learning. Because my knowledge about ETF also can be quite rusty, I know. Okay, so really, I mean, when you do options contract and selling, right, the bid and ask price, the spread is important, so do keep a lookout. If the bid and ask is so wide, you can actually limit your profit a lot, really. Okay, remember, if no volume, like I said, sometimes it's not whether you want to close the contract or not. No one there to help you close, or no counterparty. Okay, they call it market maker or whatever, right? No one wants to be like help you to buy or sell to close your contract. Okay, nothing to sell to you to let you close because of the ask. Okay, no one want to pay more, right? It's the waiting game, right? You don't want to pay 150, you only want to pay $1, then you wait, you wait. You can wait forever. You may never ever get to close your contract unless you pay 150. So do bear this in mind, okay? So when you want to view any stocks, sell any options on any stock, okay, because different people, different preference. I know some of y'all may not want to sell, or maybe don't want to sell those more popular stock. Maybe you want to sell like whatever lah, maybe things like Neo, what GameStop, all this, okay. I personally don't recommend because it's risky, but it's up to you. I'm not a financial advisor. You can do whatever you want with your money. I respect that. But just bear in mind, the bid and ask can actually determine your profit quite a bit. So my take, okay, my personal, okay, my own style is I only do options on those that have at least huge volume. Not enough volume, I won't do it. So volume matters, okay, volume matters. So you want to do well in this option view strategy, you have to look at all these components, not just sell cash cover put, assign I sell covered call, I just maximize the premium, sell as close as to the strike price, that's it. I think this alone won't really extract the full value of the option view strategy. You're not really maximizing every single element and essence to really get the most out of it and to build your portfolio faster. I think a few days ago we talked about the capital appreciation, how to set your strike price and why it matters so much. So I won't repeat, but just remember the option view strategy has many other elements that you really have to think through, break it down. Then you have to work on that aspect and make use of it so you can make more cash. Okay? Yeah. So end of the day, I hope I managed to say something new, okay? I know a lot of video always repeat the same thing, option view strategy, 0.3 delta, gamma, what, all these risks, 1 DTE, 10 DTE, 30 DTE, all these things. So end of the day, I always like to try to say something that's different. So hopefully you'll find it valuable and useful rather than keep hearing I repeat what other people say. You're also bored, right? You're like, "Aiya, pigeon bro, why you keep saying other people, what other people have said? Why you keep repeating what others have said? You call yourself pigeon, myself call yourself parrot, parrot investment." keep repeating, right? So hopefully I managed to say something new for you all, okay, new perspective for you all to consider. Wow, 9:40, okay. Let's see any comments or not. Hey, any questions, let me know. Hey, you, when do you start selling options? Oh, wow, long ago, many years, I can't recall. But since quite long, I've been doing options view strategy. So just to share a quick recap. No, not quick recap. More like a quick history is that actually when I first started selling options, I was actually a noob, quite a noob. I only know the basic, there is a sell, catch cover put, and then when I'm assigned, I sell the covered call. That's all. That's all I know. I don't even, and I also tried different strategy like iron condor, butterfly. What is the other one? Selling both at the same price, then earn the difference in the. I suddenly cannot recall. There's many strategy for option selling. Okay, wheel is one of them. You have iron condor, butterfly, lizard monitor, whatever, all the things I can't remember. Or there's another one I can't recall. I sell both at the same strike price or what, then earn the differences in the direction. Suddenly I cannot recall. But the reason I no longer talk about them is because I've tried them, it doesn't work. Okay, sometimes I make money, but sometimes I don't. After trying so much, spending all this money, the only one that works is the option view strategy for me personally. Okay, so I only talk about that because that is the only option view strategy that consistently make me money throughout. No bear, bull market, sideways, I've developed a system to make money consistently most of the time. And if there's any market crash, I also develop a system to manage the crashes and be able to sustain myself. So, and I also studied the option view strategy very in depth and trial and error through every single area, be it the capital appreciation part or trying to farm the dividend, farm the theta, or even farm a bit of gamma, 1DT, that kind. I can't remember, 0DT, okay. So I tried all, only the option view strategy works for me, and I'm so familiar now with this option view strategy, and it works for me. So that's why I only talk about option view strategy. Yeah, so that's a bit of story, okay, a bit of history on how I came to this option view strategy. I know it's challenging to show live option trade. Can you try to record how you sell put? And you can explain through next day live stream what to look out. Oh, sorry, I read in the comment. Let me read the comment, okay? I know it is challenging to show live option trade. Can you try to record how you sell put call option and you explain through next day live stream what to look out, showing the recording video? Okay, so I'm still trying to figure out, probably you want me to take you through the process, right? Like what button to click, what button to press, and then at that time also explain the process. So no problem. Give me some time. I'm trying to figure out this OBS software. Okay, I only one person. Sorry. People always message me on TikTok, Instagram, and YouTube, all this. So I need some time to respond to everyone. Okay. So no problem, Yaf. No problem, Yaf. I will definitely work on it, and then I will try to figure out this OBS, or maybe try another broadcast software or whatever. And then we go through the buttons slowly, step by step. Like right click, left click. Then you all can see the whole entire process. Okay, definitely we'll look into, no problem. Yeah, no problem. Hey, regular guy, good to see you. Hi. Hey, if you are here in the previous stream, like I said, please feel free to say hi. Happy to say hello to you all, chit chat with you, all these things. Okay, so just to add on, I always explain my thought processes, like my options plans. Like, recently I sell the 2 Apple put. I share with you on the rationale on why I built that 2 Apple put position. So the reason behind, I always let you all know. Okay, as for the process, the how part, what button to click, let me figure that out, and then hopefully I can let you all know soon, and then we can do it together. Then you all can step by step see. And I think maybe it's also true. Yeah, I think you're right. Maybe it's good to have a video recording, so it's easier, right? So you all can just watch the video and you all can see how it's done, rather than you have to fast forward, back forward the whole stream. I mean, this stream is like about 1 hour. Then you have to click the timer, drag here, drag there. Hey, must drag big back and forth, a bit hard. So I will also look into that. But give me some time, okay? Give me some time. Can. Okay. So market open. Market open. Let's go in to take a look. Okay. Okay, I change screen now. I put my options on top. Okay, put my options on top. So my first screen is option, second screen is the market. Let's take a look. Okay, Tencent, what, down again? Gone case. No, Alibaba drop again. Tencent drop again. When can I ever get out of my China stocks? Maybe I really have to just sell 25% and take all the loss. Then take the money, the whatever capital I have, and then put into an ETF, put into SPL 500 or whatever. Okay, Tesla, okay. But by the way, I no longer really talk about Tesla as compared in the past because I don't really have a heavy position like last time. Last time I used to have quite a bit of Tesla, easily a few hundred shares. But to be honest, I think Tesla fundamental is not really there. But I still hold Tesla share, to be honest, okay? I think I still have 200 shares, I can't remember, okay? I can't remember the exact number, okay? But the reason is because of diversification, because I still believe in Tesla vision in the long run. But I'm not adding anymore, I'm not selling cash cover put or whatever because I no longer have strong conviction. Okay, but I still hold the shares because I cannot predict the future. I acknowledge it. Who knows Tesla next time, few months down the road come up with something miraculous. And then I have at least a few hundred shares of it. Yeah, because some of you actually asked me to talk about Tesla because last time I used to talk about it. Nowadays not so. Okay, I never even cover the, I think, recent earnings or whatever because I'm not that heavily involved. Like I don't have a huge position, then no point really talking about it as well. iShares, MG, FXI, all also down. Okay, gone case. Okay, Apple, let me see Apple. 303, okay. I will not hesitate. Can buy already. Okay, I don't know you all can see my screen or not. Why options? Okay, so Apple 303 to me is attractive enough to be honest. So, okay, so yeah, I'll just buy lah. Okay, anyway, it's my target price to be honest. I wish for 280290, but 303 is fine, so I'll just buy what I want to buy. So all my buy, sell are live. Okay, I just share with you upfront. I bought. Okay, I already shared my top processes behind Apple. I won't repeat, but I will share with you right now. I always wanted to buy at least 10 to 20 shares of Apple because yesterday night I overslept. I missed out the 305, but now it's 303, even better. So might as well just buy. Okay, so I might as well just buy now. Okay, let me see. No need waste time, just buy. Okay. Let me see. Give me a while, I just buy my Apple shares now. Sorry, let me lock it in. I scared later I fall asleep again. Okay. So I just bought my 20 Apple shares. Okay, refresh already. Is it refresh or let me see? So if you all see my first picture on top, my options holding, there's a new thing called Apple, right? The new first row Apple. Yeah, so I bought 20 shares. So I'm very upfront honest, okay? I just click the button and bought the 20 shares. The first row on my first screen. Okay, so transparency, I just share with you all my thought processes, my actions, all these things. So I won't repeat, but just a quick recap. I still believe in Apple, even though recent forward guidance a bit weak. But because the CEO Tim Cooks, and he will transit to the chairperson, so he will still be there, and the management remains solid. So I still believe in their strong leadership. So I'm still vested in Apple. Now, in case, just a quick one, in case some of you ask me, hey, why only 20 Apple? Why don't you sell cash cover put instead? True, I do both. You can see there's Apple shares on top, right? Apple puts. My cash cover put Apple on top. So I also buy Apple shares. Now, why only 20 shares? Why I don't buy 200 or 2,000, right? Since I have about 100k plus cash ready. Reason is also, once again, cash flow management. You see, I have so many put position. If I don't manage my cash flow properly, and when the assignment comes or market crash, I'll be in trouble. Okay, so I cannot overbuy. I have to buy in batches and be very strict with this rule I set for myself. Imagine I greedy, I try to think, hey, Apple now 303, let's buy 200 shares. Who knows Apple go up tomorrow? So that's straight down, honestly, it's just guessing game already, it's gambling already. I always avoid that. Okay, I always control myself. 20 shares is about 6,000, I'm very comfortable with that. But 200 shares is 60k. Okay, big difference. 60k cash flow versus 6k. So it's a huge difference. 6k, no problem. I still have quite a bit of cash flow to move around to meet all my assignment or options contract if I get assigned. But if I cough out 60k now and buy 200 shares, next month maybe I get assignment, I'll be in trouble. Maybe I don't have enough money. Okay, 60k is quite a lot of money. Okay, it's like almost a value of 2 Apple put options. In fact, more than that, you look at my Apple put, I have 250, 230, $200 strike price, all this. $60,000 is equivalent to 2 of the put options already. So imagine if I don't have the 60k now, I get assignment, I cannot pay, I'm in trouble. Either I roll or I have to forcefully sell some of my stocks to pay for it or to close my contract. So remember, cash flow management is very important. If you want to do the option view strategy, I cannot emphasize enough, cash flow is very important. If you cannot manage cash flow properly, then try to limit the amount of contract you sell and make sure you have the cash ready immediately on hand to take assignment if ready. If you are more confident, more seasoned, then you can afford to stagger your put, stagger your options contract. Just make sure when the time comes, you will have the cash ready. You may not have the cash ready now, but you have the cash ready when the time comes. That's a big difference, okay? So be your contract expire in 1 year, you have the cash ready in 1 year, then that's fine, it's up to you. Okay, so just share with you all, okay, I bought my Apple 20 shares, quite happy. I will definitely buy more, maybe in my other brokerage account. I have a few brokerage accounts, all capped at about 200k plus minus. I try to limit the 200k just to diversify across the brokerage account. So Apple continue to be my third biggest holding, and I'm trying to ramp up Apple a lot. So if it drop further, I will likely buy more. Okay, so share with you all. Okay, next, let me see. Hey, any questions, let me know. Any comments or other views or whatever. Happy to hear from you. Happy to hear from you. And I hope you'll also be making money. Stock market, I think recently rallied quite a bit regardless. SPY is now what? 770, right? Let me see. Oh, SPY now is 773. I think market overall has been trending upwards, doing very well. So if you have stakes, your shares, especially SPY, chances are I think you're probably doing very well. So you see, that's why if you don't own stocks, I hate to say it, if you don't own stocks or you have position in the market, I personally feel it actually is really missing out a lot. But of course, I also accept that different people, different opinions. Some people, they are very allergic to the stock market. They feel that stock market is a trap. Buy, then lose everything. Then they bankruptcy, right? Then you see in the drama or TV, right? They jump off from building, that kind of stuff, all the nonsense. So it's not true. Drama is, the TV show usually very dramatic. It's not true. Okay? If you buy and you buy based on what you have, you don't contra or short or leverage that kind, usually it's quite safe, to be honest, like ETF, all this. But at the end of the day, I'm not financial advisor. I'm just a bird. I'm just a pigeon. So what you want to do with your money is up to you. But personally, it's just my take is that if let's say it's for me, if I'm not vested in the market, I feel it's a very huge wasted opportunity, because there's so much value you can gain from the market. And there is a reason why all the elite, rich people, top government officials, they are all vested in the market, because they know it makes them money. That's the cold hard truth. All the people in politics, I forget her name, Nancy Pure Lead, also is a huge stock market trader or whatever. Okay, I don't deviate so much. So that's all for the options component and the stock market. We see any other opportunities? to sell any contracts on or close any contract. Oh, Nvidia maybe have potential to close. Let me take a look. Apple, okay. Okay, so Apple will probably need to drop more before I sell more cash cover put because I already have 4 puts on it. So if Apple maybe drop to 280, 270, I will do more puts on it. Okay, Microsoft looks tempting, but not enough. Okay, so probably I will want Microsoft to dip a bit more in price. Maybe 450 to like 470, I will definitely do some cash cover put on it because I currently do not hold any Microsoft puts. So I definitely want to build some position in terms of the cash cover puts on it. Okay, I think that's about it for this market today. So I share with you all the potential opportunities that I think I could make money from all this. So it's up to you all. You all can consider. So my Nvidia put, okay, it has gone up quite a bit. So you see, this one I want to share with you. This one is quite key. Row number 12. Okay, row number 12, you all see highlighted. Nvidia put, okay. So you see, the cost was $12.39. So I collected $1,200 premium. Okay, to close the current contract is at $6.58, so $658. Okay, row 11, I want to demonstrate to you all. Okay, so let me show you on the screen. I'll adjust a bit because, like I said, I'm still figuring out this OBS thingy. So just remember the row I highlighted, okay, is the Nvidia put. Okay, so I shift the whole thing to the left. So I want to explain to you all that I'll probably close the position today. Right now, I show you. Okay, so you see the row I highlighted, which is 12. This is Nvidia put position. The strike price is $155. Okay, the expiry date is next year June, so it's about 10 months from now. Okay, expiry still got 10 more months. But you can see I have already made $580 and the profit margin is 46%. 46%. So my target is always 50%, okay? 50% I close it. So for this 46%, I will close now. I will close now. Why? I know yesterday I explained, but let me recap in case you were not here yesterday. Because Nvidia, number one, they're reporting earnings soon in about 3 more weeks time or 2 more weeks time. So earnings season, right, it can be quite volatile. Example, if let's say Nvidia suddenly announce bad result, bam, Nvidia stock crash. This profitable position, right, 46%, can suddenly turn negative, okay? If you think stock price move fast, especially Nvidia, the underlying option move even faster. From profitable in one night, 50% profit can turn to 50% loss. No joke, okay? Options are very volatile. That's why options, to be honest, they are high risk investment. But if you are familiar, you are good in it, it's very manageable. So another second reason is this contract still has 10 months more to go. Do I want to wait 10 more months to earn the remaining 54%, 53%? Doesn't sound very worth it, to be honest. The risk reward ratio I feel is not really there. Remember, if I hold it for 10 months, 10 more months to extract the full remaining value of that $600 plus, I have to go through another 3 more earnings season. Every quarter there's earnings, right? Okay, maybe 2 more, okay? So about 3 more. So every 3 months there's an earnings season. Every 3 months there's an earnings. So every 3 months company will report earnings. So I have 10 more months to go. That means I must risk myself over 3 earnings season. Do I want to take the risk? Always remember, earnings season stock is very volatile. Same goes for the option. It can turn very fast against you. Especially Nvidia suddenly say, oh, Jensen Huang suddenly say, our chips, Vera Ruby, nobody want to buy. Even the bird also don't want to buy. Gone case, okay? That anything can happen. So that's why at 46% profit margin, I'm satisfied. I will close it right now. But unfortunately, when I close it, you cannot see. So, but I just share with you, okay? I will just queue now. Okay, the bid, can you see the bid? Okay, so this part, let me figure it out. Okay, when there's a chance, I will try to figure it out and then show you. So thank you, for the suggestion. I will definitely look into it. So it's between 645 and 670. So maybe I'll just queue up at about 6.55. Okay, 6.5. So I will pay $655 to close this contract. So remember, I just want to let you know, when I sell this contract, I straight away get the premiums. Okay, because some of you don't understand what I'm talking sometimes about closing option, closing contract, very confusing. Remember, when you first sell a contract, you immediately get the money, which is under the cost column, which is $1,200. So now I close it, I have to pay money to buy back. But because of the profit I made, I only need to pay $655 to buy back the contract. So 1,200 minus $655, I will earn the remaining 500 plus, so about 580 or $600. So that's the difference I make. So that's, hopefully I explain this part to you all about closing contract and making the difference. Okay, let me see. Okay, I buy back the contract now. Give me a while, I just buy back now. So you all can see the number 12 will disappear, okay? The number 12, 47%, 48% will disappear. Hopefully it gets filled. I think I queue at 650, it should work. It's sold already. Okay, so you all can see it turned to 0.00. 0.00. So it's gone already. I closed the contract. So remember, I know it may look insignificant, right? Hey, you only make $600, close at 46%. Why don't you wait until 60% or 70% then close? So I tell you honestly, that is called greed. Really is greed. I set the profit margin of 50%, I should stick to it. And if you want to titrate, you can titrate downwards, but not upwards. 50% profit margin, is ideal. Okay, if I can't get 50%, 46%, 48%, I'm also fine. Especially seeing that there's earnings season coming soon and there's still 10 more months to the contract. I don't want to take the risk, so I just close it and collect the $600 plus as profit. Okay? Now, if you try to be greedy and try to think, I think I want to close at 60% profit. So maybe instead of paying $600, I just pay like $400 to close the contract. Then I can earn $800, right? 1,200 minus $400 is $800. So I tell you, that is downright just greed. I hate to say, okay, if you think that works for you, good for you. But for me, no. Okay, I just think that after being in the options selling for so long, you should always stick to your own rules. Okay, people use the word discipline, routine or what. I just use the word rules. My rule is 50% profit. If it doesn't hit, if it's 40 plus, I will take a look at the circumstances. If I think it warrants me to close at 40, 46%, I will still do it if the risk-reward ratio not really ideal for me. So I hope today is a good opportunity that I managed to share with you all why sometimes I will close below 50%. So I hope it's a good sharing session. I mean, it's a good chance that just nice Nvidia went up, the option is profitable within my ideal range. I close it, take profit and put in my pocket. Okay, so pretty good. I have made $590. Can you all see the P and L? Okay, it's 0 already lah, so you all maybe cannot see. The P and L column. In the middle, you all can see, right? 590.44 cents is my profit margin. So I'm quite happy. Okay, like I said, option view strategy is not about huge win 10x your money. It's just multiple small wins. 500, 600, 300, 200, $150, 1K, 2K here and there, all adds up to be thousands of dollars per month. Okay, so good chance I get to demonstrate to you all this closing options. But the whole process, the button to click, I will figure it out and then I'll share with you. Okay, so last component, any questions, just let me know. If my explanation not clear or you want to know more about the Nvidia put, can let me know. So I hope this transparent sharing and the live, all these are done live, no fake one. No bluff. You all can see Apple appear on top right when I buy 20. Then the option get closed. You all can see all live. All live. So I hope through the live sharing and the discussion we all have, you all have a clearer picture. And it's also easier for me to explain to you all on options. I know some of you all message me on Instagram to talk about options. I find it very difficult to do short video to explain to you all about options, to be honest. But I can give you all a rough idea of it. But to give you all the depth, to show you all how really very challenging. So I really encourage you all to just come in and chit chat, ask your questions straight away. So I can explain to you all more in depth and give you all more step-by-step guidance. Not say guidance, I'm not good enough, okay? I'm not financial advice. maybe just share with you what I do step by step, so hopefully it will be clearer for you when you do it yourself. Okay, 10:03, 10:03. Okay, we stopping soon. Okay, let me just quickly read the comments. Optimus Robot, Tesla Robo Taxi under Tesla, but I mean Musk is focused SpaceX. Yeah, I mean I just feel this Robo Taxi is not being dished out fast enough. I just that's my take. And secondly, I also hate to say, if to be honest, if Tesla has no Elon Musk, Tesla will be gone case. That's my take. I know they have other management people, but unfortunately, because of that time recently, I think Elon Musk asked for a $1 trillion package, right? Something like, if you want me to stay in Tesla, to help Tesla make money, you need to approve this $1 trillion package or something like that. I can't remember, compensation package. In the end, all the shareholders, right, voted willingly. All agree, majority all supported Elon, except for some of the institutional investors who disagreed. So you can see how much Elon matters to Tesla. And literally, I think if there's no Elon Musk in Tesla, Tesla will go downhill. Especially now Tesla being so overvalued, such a high price earning ratio, fundamental not say super strong, to be honest. If there's no Elon Musk holding the fort, unfortunately, I think Tesla will likely dip. So that's why I really limit my exposure to Tesla. I'm no longer adding new position. That's just my thing, okay? That's just my thing. Buy ETF should be safe with long timeline, 10 years. Yeah, correct. So my take is ETF average now is 8 to 10% per year, like SPY 500, or even like IWDA, one of my favorite. Okay, I know since you're Singaporean, I think you probably know domicile in Ireland, we have 15% withholding tax instead of 30% like SPY 500. So IWDA itself also can give about 9 to 10% per year. But of course, the benefit of holding SPY 500 is you can sell cash cover put. Okay, IWDA cannot because I don't think they have options there. So that's the one advantage. But the 30% withholding tax is quite fierce. And the estate tax also quite fierce. I think estate tax is like 40%, right? If someone pass away, I think the estate tax is as high as 40%. Can't remember. So there's pros and cons. But in short, ETF really, personally, if I'm a pure beginner, I will go for ETF. Strong, stable, and to be honest, even better than some of the dividend stocks out there, especially the Singapore REITs. To be honest, Singapore REIT 5%, ETF 10%. No brainer lah, to me it's no brainer. But of course, some people still don't believe in ETF. No problem, respect that. But personally, I will take ETF any day, anytime. Even now, to be honest, I did say before, I'm contemplating to stop all this option trading, Stop everything and then just buy ETF and then just live off the ETF. 10% a year is not bad. It's enough to get by for me, no problem. Because all this option is so strenuous. You see, when I talk to you can see so many thinking and thought processes behind it. Is it ETF, capital appreciation, how to farm the premiums, dividends, triple income, setting delta, strike price, monitor the market, doing popular stocks, make sure the bid and ask price. See, there's so many elements in an option view strategy. To be honest, sometimes I do think about it, just stop all these things, buy the ETF. I got more time to enjoy myself. Okay. Can. Make money, congrats. Yeah, hey, thank you, Yaf. Hey, thank you so much, Yaf. I really appreciate you, to be honest. You are one of my earliest supporters in terms of this live stream. You always drop by. I'm very happy to see you every time. Hey, I also hope you make money. Hope you make money, can also buy bubble tea. Yeah, yesterday I buy Chagi. See here, got one straw here. So now I make 600 plus, right? I can drink Chagi tomorrow again. Or maybe drink Koi. Okay, drinks, no need to drink Mishi since I make 600 plus. Just kidding, Mishi also good, okay? Just that, of course, lower quality, but it's much cheaper. Yeah, so you can see, I hope I managed to demonstrate to you that option strategy, especially option selling, if done correctly, can be profitable as well. You look at my contract on top, a lot of them are green actually. You know, of course they are red, to be honest, it's like that. So in fact, I can close most of them at a certain amount of profit. So option view strategy, when done correctly, like I demonstrate to you all in the first screen, can be profitable. Remember, most people I think can understand the view strategy, but to understand it in depth, very in depth, you really have to use it more often and really research and study into it and practice and sell to get the experience. And most people, honestly, the view strategy won't fail you. Is people fail the option view strategy because they are greedy, impatient, you know, want to 10x their money fast. Like just now earlier is a very good example. I could have just tell myself, hey, 40% profit not enough. I want 100% profit. So I will wait until the contract expires to collect the full $1,200 instead of just collecting like $580 or $600. So it's usually this type of greed that is the downfall, to be honest. Greed is your downfall when it comes to the option view strategy. So remember, cannot be greedy, okay? Cannot be greedy. If you are impatient, cannot use this strategy, won't work. You will bust your account. One fine day you will just say, hey, I cannot take it. I will buy or sell 1 DT or 0 DTE, 100 contracts, so I can get like $50,000 in one night, or I lose my entire portfolio. Okay, that will occur if you're impatient. That belongs to the WSB, you know, Wall Street's bet Reddit that site. Okay, last component. Wow, 10. Okay, maybe we don't cover the last component. We just sum up here, okay? Because actually I want to talk about my retirement strategy. I want to share with you all my how much I'm spending, how I manage my spending, my 0.01% rule for managing my finance and retirement. Then also maybe hear from you all if you want any feedback or even any idea you want to share with me. So also share with you all some of my thought processes on early retirement, how we can manage our finance, and why certain strategy in retirement will be ideal to not just make sure you have enough money to spend. That is not the ideal. To me, to retire well is to make sure you have enough money to spend, enough money for contingency and inflation, and enough money to go into your portfolio every month or every year. And to make sure that your portfolio will grow bigger every year, so that every year the amount you can spend will keep increasing to combat inflation or emergency or whatever. So that's my whole ideal plan of retirement, and I want to share with you all, okay? Then you all can feedback whether is it ideal or is it not possible or not feasible. So it's something, because I retired for 1 year, I've come up with this plan that I think it might work, that based on my spending, the habits, how I manage, or even geopolitical arbitrage, like relocate to a cheaper country. So I have come to a point whereby I will be able to, using this strategy that I'm using now, to spend, enjoy, and at the same time keep building my portfolio, so that every year I will draw down more and more. That means every year I get to spend more and more. I get to have more disposable income. Portfolio continue to grow while maintaining while having the ability to manage inflation non-stop. But we keep it for next time because it's 10:12 already. I don't want to hold you all back longer. Okay, so that's all for today's stream. Let me catch up with any final comments, then we end it here really. I just want to say thank you very much everyone who dropped by today. Very happy to see you all. So we keep the retirement for another time. Okay, so thanks everyone for dropping by. You, Yav, hey, thank you so much again, Yav. Okay, very happy to see you. Vroon, and then regular guy, good to see you as well. Very good to see you. I know. I mean, we are still with some other members. I mean, what Miaga, Flaming Snow, the Freedom Project, all this. I hope to just see you all soon again. Maybe you all are lurking or what in other place. Feel free to say hi. If you all don't want to say hi, it's also okay. I respect that. Okay, but it'll be good if we can chit chat. You all have questions, can ask me or share me your thoughts or disagreement, so I can learn from you also. Okay, so that's all. I will end here. Thank you so much everyone for dropping by today's stream. Same thing tomorrow, 9 p.m. GMT plus 8. The last stream of the week, okay? Thursday. I stream Monday to Thursday, so Thursday is the last stream. So tomorrow will be the last stream of the week, and then we have a good rest on the Friday, Saturday, Sunday. So hope everyone have a good rest also coming soon. And today, see y'all tomorrow, and same timing, GMT plus 8 the time zone. Okay, Yaf, good to see you, Yaf. And then goodbye everyone, goodbye everyone. See y'all tomorrow, see y'all tomorrow. Very happy to chit chat with y'all. Take care, bye bye.